Shares of Vishal Megamart fall nearly 3.5%, have recovered from lows after the large trade when 91 crore shares worth nearly 10,500 crore rupees change hands in a block deal. Promoter entity Samayat Services is the likely seller.
Zee Entertainment gains as the board approves a fundraise with promoters set to invest 2,200 crore rupees via the issue of fully convertible warrants on a preferential basis.
Shares of Godrej Properties, they rise marginally after they buy nearly 16 acres of land in Pune to develop premium housing and high street retail with a potential revenue of 3,100 crore rupees.
Schneider Electric gains after Goldman Sachs upgrades the stock to a buy rating from a sell rating. The target price they fixed at 910 rupees with growing total addressable market and government support expected to be the driver of growth.
Axis Cades Technologies up 5% in the upper circuit as the company has inked an agreement with Europe's Indra to jointly develop defense and aerospace solutions.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets, well, a little bit lower the headline index. The good news, though, today is from the broader markets, yet again, we are seeing a bit of an outperformance. So the mid-cap index is up 0.2%, and you still have more number of stocks advancing than declining. I think, Mangalam, we're still in this band, the 600-point band on the Nifty. We'll require a trigger to move either which direction, but otherwise, the headline index, as has been the case for the last 45 days, continues to consolidate.
Continues to consolidate, Nigel. What's interesting is that in the headline index, the three large components that we have, the banks, the IT index, and Reliance, they've taken turns to move in different directions. So right now, as we speak, the banks have recovered a tad from the lows. They're just below the flat line. So just keep an eye out on that. The IT index has moved to the high point of trade. So with all of this working for the frontline index, what is not working? Reliance. That was the top contributor on the way up in yesterday's trading session, but now has moved to the low point of trade. So we'll keep an eye out on that one. So the frontline index yesterday was supported by Reliance. Today, the Nifty bank is not falling as much. The IT index has moved higher, but Reliance has moved to the low point of trade. So where it goes from here is something that we'll most definitely keep an eye out on. In fact, we're not the experts. We do have Shilpa Rath from Prabhudas Leerathar joining in for a quick technical check on the market. Shilpa, the Nifty back in the range, we thought there would be a breakout post the RBI policy, but no, that doesn't seem to be the case.
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the indices setup, we do see there's some sort of exertion at around 25,000 mark that is acting as a good resistance for now. But the support also is very well placed at around 24,800 to 700 band. So definitely there's no trade for Nifty right now. We have to wait. At least there should be some sort of dip towards 24,800, then you should go long. Otherwise, a breach and decisive sustenance above 25,000 will only trigger some sort of upside rally. Talking about Bank Nifty, again, the same scenario. We see that 56,000, 56,200 is acting as a resistance band again, and the support is very strong at 55,000. So this range for Bank Nifty, I believe, is going to stay for a while now. And, any decisive breach on either side will only trigger some sort of rally on either of the side.
All right. And individual stocks, what do you have on your list, Shilpa?
Today we see that stocks are outperforming the indices. So I have two buys. The first one would be a buy in RVNL. RVNL is trading around 410, so it is approaching some sort of range breakout here. If you see, once a move above 412 or something, you will see a very strong up move towards 425 to 430. So keep a stop loss of 400 and stay long in RVNL. The other one would be a buy in CAMS. CAMS, again, it's showing outrightly, strong potential for upside rally towards 4,500 zones. So from here, I believe that one can stay long and keep a stop loss at around 4170 and look for targets of 4,400 to 4,500 band.
Okay, all right. Thanks a lot for that, Shilpa. Well, CNBC TV18 Access is a premium and membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits as well, designed for an immersive and enriching experience. It empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to cnbc-tv18.com/access/plans.
Welcome back. The Nifty Bank has moved into the green just from below the flat line, and that's because of Axis Bank and some recovery from the lows on HDFC Bank. That one's still in the red, HDFC Bank, but has recovered from the lows. And look at the IT stocks. They're zooming right now. The IT index, we have Infosys, which has moved higher. And those are some visuals that we're getting from Donald Trump, who's left the G7 summit early due to rising West Asia tensions. So any sort of updates coming in on there would be extremely crucial. All eyes on the Israel-Iran talks and what the America role would be out here itself. So those are some visuals of Donald Trump coming out of the plane. Now, we'll keep an eye out on the market once again. We were speaking about the IT stocks, so the IT index comes up for you on the screen. We'll keep an eye out on a bunch of these mid-cap IT names as well. Donald Trump walking towards, let's see whether there are some press reporters out there. Is he going to address the media, or is he likely to give a bite or not? But for now, those are just some visuals of him emerging from the plane. Persistent Systems higher, Biocon higher. Biocon, in fact, the QIP opened yesterday, 4,500 crore QIP. That stock's moved to the high point of trade. And we are seeing an uptick in Dixon Tech as well. The management joined us earlier today, said that export target for this year is closer to 8 to 9,000 crores versus 1,800 crores that we had seen earlier. So that stock too spiking. But the stock on our radar is SJS Enterprises. The company operates in value-added aesthetics space. The company delivered double-digit revenue growth and strong cash flow generation in the fourth quarter, looking to outperform the industry going ahead as well. Sanjay Thapar, who's the group CEO and executive director, joins in now. Thanks a lot, Mr. Thapar, for joining in. You know, the obvious question, over the last couple of years, you've seen a big jump in your revenue. 433 crores in FY23 turned into 760 crores in FY25. What's your prognosis in terms of revenue growth for FY26 and beyond? And the margins as well. While, your revenue has grown, your margins have stayed between the 24 to 26% band. Where does that number go to?
So what we've been guiding the market is that we've outperformed the underlying industry each quarter for the past 22 quarters that we've been listed. So we will continue to outperform the industry in this year as well. Our guidance really is that we'll be 2x of the industry rate of growth for the financial year 26. In terms of margins, we've been fairly steady. So last year we recorded 26.4% EBITDA margins, and we expanded margins, in fact, by 1.29%. So we continue to see very strong traction with our customers across markets, including India and exports, and we are quite bullish.
All right. Hi, Mr. Thapar. Good morning and welcome to the show. This is Nigel on this side. I'm looking at a brokerage report coming in from Elara, and they are quite bullish on your company. They are talking about, from the last year that you've done around 760 crores. They believe by FY28, your revenues will be in the vicinity of around 1,250 crores. Do you think that's possible?
Yes, it is. So we see we continue winning very large businesses, both in India and overseas.
Okay.
And we have, as I said earlier, very bullish. We've set for ourselves a set of products that are unique, and that gives us a lot of traction for growth.
So 1,250 crores of revenues with mid-20s margins, correct?
Yes, we've been fairly consistent at the margin delivery for a company.
All right. Let's focus on your kit value then. If I look at your kit value, currently majority of your business comes in from two-wheelers, but you'll have gradually been focusing on PVs as well. And out there, the kit value itself is 3 to 5 times what you have in two-wheelers. Could you tell us how do you see your revenue mix shape up? A note states that from around 17% of total revenue contribution from PVs, they're expecting it to go to more than 35%. Do you concur? And how can you improve on the kit value in each of your segment, the consumer durables, two-wheelers, as well as PVs? Please go ahead, sir.
Just a fact check. So we are already last year we finished with 40% revenues from the. So we very successfully pivoted the company. Traditionally, it used to be a two-wheeler focused company, but no longer. So two-wheelers are just about 34-35% of our sales.
Okay.
Passenger vehicles are 40%. As you know, passenger vehicles, there's a large product mix that we are in a position to supply to, both for the interiors of the car and the exteriors. So obviously, there are many much great opportunities lying ahead of us.
All right. Yeah, Mr. Tapar, apologies for that. Actually, I was referring to the way you'll have moved from 2021 to 2025. So that's why the error in that calculation, 17 to around 35-40%. Got that. The kit value, sir, that's something that you'll have improved on as well. If I look at the same duration, 2021 two-wheelers were between 300 to 500. Now it's 600 to 1,000. PVs were around 1,500. Now it's at around 3,500. So for each of these segments, how do you see the kit value increase?
So what we have done is we've added some very high value added products, especially with the acquisition of a company called Walterpack from Walterpack, Spain. That brings in our portfolio a very large set of products, that is IML products for the interior of the car. A car could use roughly from 1,000 rupees to a 5,000 rupee IML component in a car. So traditionally, we used to supply just about 80 rupees in FY19. That increased to about 350 rupees in 21. Then we acquired a chrome plating company, Exotech Plus, now called SCS Decoplast, which added about another 1,500 rupees to the kit value. With Walterpack, we added another 4,500 to the kit value. And now we are looking at entering in this area of optical glass, which is the center track display that you have, which will again very significantly add to the kit value. So what we are looking at really is potentially a 10,000 rupee kit value for a passenger vehicle. And there are large markets for this, both in India and the overseas markets.
By when does this 10,000 rupee come?
I mean, we don't supply all the products to all the models. These typically go on the high-end cars. But as we've seen, the trend towards premiumization is that more and more of these high-end products find their way to the mid-segment and ultimately to the entry-level vehicles as well. So driving the theme of premiumization. So it would, I guess, take time, but it's anybody's guess as to when this will come. But directionally, we are on the right path.
Right. You know, that's very interesting because I remember the last time you joined us, you did indicate that you are likely to see a higher share of revenue coming in from these premium products, chrome included, and new gen products, which earlier were sub 15% of your sales, have now moved to closer to 30% of sales as well. I wanted your thoughts on client additions and market share, because on the one hand, you can increase your revenue by increasing the kit value and the offerings that you make. The second hand, your revenue increases by the number of models that you supply to or the number of companies that you tie up with as well. On that front, what is the kind of guidance that you can give us? What are the new models that you're looking at for both two-wheelers and four-wheelers? How long do these contracts last, and what will the value of each of these contracts be going forward?
The four-wheeler contracts are long duration, so they're roughly about 7 to 8 years lifetime. For the two-wheeler products, there's a model change that happens after 1.5 years. So coming back to the customer addition, so we've done some very notable customer acquisitions in the recent past 6 months. So we've added Hero MotoCorp as a customer, a mainline customer that opens up doors of great revenue growth in the domestic market. On the export markets, we've acquired a global business from Stellantis across geographies. So we will supply to India, Europe, North America, Latin America. And this is for the first time that we will have complete ownership of the branding of the vehicle. When I say branding, it means that the nameplates that go on the vehicle, all of them will come from SGS. So I think great progress. And what's heartening to note is that we did not win this because of lower cost, but of new technology that we introduced. So I think that's the reason to be, I think, for the team to be proud of.
Yes.
We hope to replicate this with other OEMs globally.
Well, kudos, sir. Kudos, in terms of that explanation as well that you've given us. Now, we have a number that's on the screen, and you were saying that Stellantis, and I think among other, international customers as well, you have, I think, Whirlpool among others. Could you give us a couple of details? I think currently your export contribution is around 7.5%. But the street believes that in the next 3 years, it can go to around 13 to 15%. Do you think that is possible? And also, if you could tell us, the order size, the RFQ of export orders, how does it differ from the domestic order?
So, I mean, the route is the same. You need to give tech shows, you need to give proposals of how you can add aesthetic appeal to vehicles, and the OEMs evaluate you, pretty much what happens in India. The recent order that we won from Stellantis is a 300 crore lifetime revenue business to be delivered over the next 7 to 8 years. So that's a good starting point for our export journey. And as I said, this is just tip of the iceberg. So we have good reputation with global OEMs, and we hope to continue this foreign exports even more aggressively. And yes, by FY28, 13 to 15% of our top line should come from exports. That is our endeavor.
All right. So 13 to 15% comes in from exports by FY28. Out of curiosity, who are your competitors in this space? Because it is a niche business, and I'm sure that a lot more other players would be eyeing something like this as well. What is your moat and market share against them?
Okay, so if I talk of the domestic market, I think we are very strongly placed. Overall, I would say that there is no competitor that I know of, either in India or globally, which has all the technologies that we have under one roof. So we are largely, it's a fragmented market. So there's a chrome plating player, he just does chrome plating. Whereas when a customer comes to us for a decoration part, chrome plating is on his mind, but we can offer him a menu card of options at different price points. And that is the key differentiator between us and competition. So as I said, there's not a single company in India or even overseas that I know of, which has about 14 different technologies that we offer to the customer. So we are quite unique in that space. And the differentiation lines from the trust that we've been able to build in customers, both domestically and export-wise. Our supply chains are very robust, both on the supply side and the purchasing from our suppliers.
Right.
Okay.
What other large companies do you not supply to, which can become potential game changers for you? You said you recently signed a deal with Hero MotoCorp. I'm sure, in the four-wheeler space and in the two-wheeler space, there are some other large players as well who you don't supply to. Are there any other big client wins that we can expect?
In India, virtually, we have everybody who's in the top 7, 8 companies in that industry. We already are supplying to them. But that doesn't mean that we supply to all their models. So we are, of course, hungry for more business, and there'll be more models that will come our way. We present a compelling value proposition to the customer. That our focus is.
All right. Final question, Mr. Thapar, before we let you go. You're sitting on cash of around 100 crores. Is that correct?
That's right.
And I think your capex for the year is around 160 crores, which you will fund via internal accruals, right?
That's right. We generate close to about 80% of EBITDA gets converted to cash flow from operations. So
got it. So that brings me to my question then with regard to inorganic growth. You've done it in the past. Are you on the prowl yet again? I believe that some inorganic plans are being stated out, and that could get closed in this fiscal. Would that be correct?
Maybe next year. So we keep gunpowder dry. We are not in a hurry to complete an acquisition, but at the right valuation. And primarily, the acquisition would be to improve market access. So
it'll be in the overseas market. Is that correct?
Sorry?
Will it be in the overseas market?
In the overseas market, but it's not that we have shut our eyes to the domestic market. If there are good opportunities at good values, which can add value to our company, why not?
And what space will this be, and what size of acquisition are you looking at?
We are looking at bite-sized acquisitions. We don't believe in taking huge amount of debts. We are a debt-free company, and we continue to do that. So maybe the top line in the region of about 400, 500 crores is what the size of the acquisition is at the moment. But again, depends on the price that we get it at.
That will be a large bite.
Not such a large
Your annual revenue is 760 crores. So you're looking at a company which does 450 odd crores. So that is obviously you increasing your revenue by nearly 50-60% immediately. Even if you look at 1 year forward, it's an increase of nearly 35-40% immediately.
And you are trading, sir, on a sales basis. You're doing 750 crores of sales and your market cap is already around 4,000 crores. So if you're looking at a 400 crore, a company that has 400 crores of sales, will it be on a similar valuation basis or will you be willing to pay less, maybe twice sales or 3 times sales or 1 time sales?
No, so the industry that we operate in operates on the margins that this company generates. So as you are aware, we are a high margin company. We would look at we are looking at companies where we could add value to improve margins. We've done that successfully with the acquisitions we've done in the past. So our rule book is very clear as to what is the side of company that we are looking at and what is the profile of the company. So we don't want to do a turnaround business. We will see where synergies can play. We can expand margins in that acquired company.
Okay. All right. Got it, sir. Maybe for the next discussion, we'll probe you a little bit more in terms of this inorganic growth. But thanks a lot for joining in and detailing the roadmap for the next 3 years or so.
All right, that's about SJS Enterprises. But while that conversation was going on, there is a comment that has come in from Donald Trump. You saw visuals of him walking across. He said, my leaving G7 summit for Washington certainly has nothing to do with a ceasefire. So this means that there is no ceasefire in sight. Whether the market takes that, takes note of that or ignores it, believing that there may be a change in the next few hours on this position itself or not, is something we'll have to monitor. But again, it's the flip-flop that continues. Him saying that my leaving G7 summit for Washington certainly has nothing to do with the ceasefire. So one wonders what it has something to do with.
He's saying it's much bigger than that. Whether purposely or not, Emmanuel gets it wrong yet again, is what he says. So let's see what's bigger than this. But for the time being, that's the statement that's coming in. I'll tell you what, slip into a short break, come back, continue focus on markets. We'll find out what's the latest with regard to President Trump as well. Welcome back. Well, as we speak, the markets actually have come off a little bit from the top, particularly the broader markets that were sitting with healthy gains. Now those crisscross lines have got a little bit closer to each other. So you still have 1,350 stocks that are advancing, but the number of stocks declining have gradually moved to around the 1,200 odd mark. On that note, though, we'll wrap up on this edition of Chartbusters with news that the Nifty is a little bit lower. The Nifty Bank as well, protecting crucial technical levels, but lower by around 150 points. Team of Trading Hour is waiting for you on the other side.